Welcome back, everyone. My name is Michael LeBlanc, Senior Portfolio Manager at Canaccord Genuity Wealth Management. Thanks for joining us here again this week on our live weekly, next week, today, our weekly update on everything that's going on in the markets, everything that we see coming up in the markets. And of course, we were away last week, so there's quite a bit to catch up on. As you can see and probably tell by the broadcast quality, we're still in temporary digs as the office continues to have renovations. Like any renovations, they're going longer than we expected, but hopefully we will be back in our normal home soon. And I apologize if you hear some background noise. I did ask for an updated schedule from them this morning, so they're being extra loud, I think, just to punish me for even questioning them. So with that, let's dive into things. And of course, as always, keep in mind, everything we talk about here is for information purposes only. If you have any direct questions or you want to discuss your personal situation, contact us. Go to mikeonmoney.com. And if you're watching this here live, that's great. But if you're listening to the recording or our podcast and you want to hear any past episodes we've done or other material we've put together, all that is available at mikeonmoney.com. You can link to all our information there, as well as all our contact portals. So with that, let's talk about what we have to talk about, the Ukrainian crisis that's going on. It seems like just before I took last week off for travel, we were talking about COVID potentially winding down, and then all of a sudden we're knee deep or neck deep into basically a war in Ukraine, with Russia continuing their attacks on the Ukrainian cities to try to take control there. Obviously, the priority number one issue that we'll raise or talk about is the humanitarian crisis. I actually have clients from Ukraine here in Canada. That's horrific stories of their families fleeing, being woken up to shelling and bombing of their cities, and the difficulty for them to get out. We've already seen over a million refugees flee the Ukraine, but millions of more trying to, but just no safe passage or safe roads out, and surrounding countries, of course, are trying to help accept those refugees in and provide safe harbor. Poland, Germany, and many other European countries surrounding the Ukraine. So number one, obviously, our sympathies and our hearts to anyone directly affected or experiencing these things. And we hope that there's some sort of safe resolution soon. We'll talk a little bit more about the effects and potential resolutions as we go through today's material. So refugees, how are this going to affect investment or the markets? Obviously, refugees moving into or countries accepting those refugees, there's going to be some costs and burdens to house them and help them out. There's been a lot of charitable efforts being put forward to help with that. If you can help, do try. Obviously, these people are living with next to nothing. We've read and heard a lot about the sanctions, the global sanctions being put onto Russia. Obviously, this is affecting Russia in massive ways, whether it's companies pulling out services from Russia, the banking sector's shutting down Russians' access to certainly to the bulk of the global financial markets. The Russian stock markets closing due to all this, the crashing of their currency, the ruble crashing due to all the sanctions and pressure being put on the financial system there. More and more that's going to actually start affecting the rest of the world. So that's something we're going to keep an eye on, how that might affect the global markets and the companies and us at home. And a quick, easy visual, if you want to see what that might look like, just look at the price of gas at the pump, and that's the first thing that you're seeing. Obviously, it's an immediate reaction to that. Russia is a massive energy producer in the world, and a lot of that trade is being turned off, especially in Europe. And we'll talk a little bit more about the US, as they've just come out with some more sanctions around that. But that's not going to go away soon. Obviously, when we turn off one of the major oil suppliers in the world, that is going to cause a shortage to a supply that was already tight. If you've been listening to our videos for the last several months, we've been talking about the energy crunch since the reopening of the economy, and now we just took out one of the major supply channels from that issue. So created more pressure on the price of oil. Commodities we're going to dive into a little bit later, but pretty much anything commodity based. Both Ukraine and Russia are big commodity producers for the world. Everything from grains to nickel and metals, all those coming out of those regions, all shut down right now. And we'll talk about how, of course, how the markets have been reacting, how they are reacting, and where we see them going from here. So with that, let's dive into what's going on in the economies this week. Coming up, we're looking for U.S. trade numbers for January, and also U.S. trade numbers for Canada this week. The futures opened up pretty good this week after a rough negative week last week. We're seeing bond yields and oil prices rising, and we'll dive into those commodities in a little bit. And after kind of a bigger pullback in the Dow Jones over the last week, moving into correction territory, there is some talk now about recession, believe it or not. It's talking about Q2, which is coming up here really quickly as potential. It's on the fence kind of discussions right now. So we have, some discussions of recession, others talking about avoiding it, just correction territory, but we'll dive into a little bit more detail around that in a moment. Investors obviously scrambling to try to analyze, what does this mean? Market volatility is there as people jump to, protective positions in the portfolios. Commodity prices are soaring due to that lack of demand. The one thing I'll say is always keep in mind, and I've said this before, markets don't like uncertainty. And right now, when it comes to the Ukrainian issue and the West versus Russia, there is complete uncertainty. So there's where you're going to find a lot of volatility, and you can make whatever guess you want or listen to any expert you want as to which way the market's going to go in the next day, or call it short-term volatility or short-term trading. And you could be right and you could be wrong. The only thing that's going to give you any direction is if we get some sort of plan or some sort of certainty as to what the outcome this is, or that we're going to see. And there's never going to be the outcome you want, but the markets just want to know what the outcome is going to be and will react accordingly to that information. Until that information comes, it is going to be volatile. There's going to be no right answer. There might be some lucky answers, but there's going to be no right answers. So I would err on the side of caution. Don't do anything. We've talked about this over the last couple of weeks. In fact, since beginning of January, we've been talking about volatility in the market and strategies to protect your portfolios. Sell into the rallies or trim into the rallies. Remember, don't sell out. Don't make a bet one way or another, but be cautious into the rallies, take some money off the table, have some cash ready to deploy if there is a pullback and we have some sort of idea of where that's going to lead. Then you can take advantage of that pullback or the volatility in that market to enhance the returns in your portfolios. And if you're clients of ours, you've been watching your portfolio, we're already almost at 40% in guaranteed cash kind of positions while we look for those opportunities. Now, we haven't gone out of positions, we've trimmed positions, we've moved away from areas that are going to be more volatile or harder to recover, things like discretionary staples. So things that people, spend when they're feeling that times are good or they're very bullish about things, and moving more into areas of staples, the commodity side of things, oil, energy we moved into, last year. So those are the kinds of areas of the market that we're sticking with. Those are also the areas that are protective during inflation, because behind all this is still that underlying theme of inflation. Obviously, inflation's taken a huge jump here with the commodities shooting up, and we haven't really even seen that yet in our day-to-day cost, except for kind of the oil and gas. But do expect other things like groceries, food, anything made with metals to start to see big price increases as those commodity prices filter through the economy. So with that, other things that are going on besides or because of the Ukraine invasion, things like EV cars, Musk's dream, and many car manufacturers out there that we've talked about over the last year that are looking to bring more affordable vehicles or EV vehicles out to the market. Already seeing slow production due to the chip manufacturing that was delayed due to the pandemic shutdowns. Now we're seeing even slower potential headwinds against getting those cheaper vehicles or cheaper models out to the market because of that driving up of all those components that go in. All those components are mostly made out of conductive material or metals, as I mentioned, nickel, lithium, which is a big one. A lot of the chip manufacturers bring in a lot of material out of the Ukraine to help them for chip manufacturing, which is already a very taxed supply chain. So as that happens, we're going to see slower and slower production when it comes to vehicles in general, but certainly around the EV market. Confusion and panic is reigning right now when it comes to the global finance in Russia's invasion wake. As I just mentioned, the blowback, we haven't even really seen what that's going to be. What is Russia going to do? Counter sanctions towards other countries and companies, but we've also not seen the full impact on our financial systems due to those sanctions being put into place. U.S. inflation, as I mentioned, is set to really heat up due to the impact of this war, and again, centered around those commodities. So anything around food, grain. Ukraine is one of the main or major grain suppliers to Europe, but also to the world. So that's going to drive those prices up. What we've already seen them on the futures market increase. We're going to start to see that at the grocery store and in everyday life and pricing. As I mentioned, that risk is so unclear. The U.S. yield collapse may benefit stocks. Usually, when we see yields in the treasuries when they go negative due to inflationary surge, we usually see the stock market increase. But we have that uncertainty as to the financial sanctions and also what's going to happen. Is this going to be Russia taking over Ukraine and having Ukraine be a puppet state? Is Russia just going to take over Ukraine, be part of Russia? Do they stop there? There's so many unknowns. It's impossible really to start saying what's going to happen with the markets. We're emphasizing with people to be careful with risk in the portfolio right now. Be cautious when seeking higher returns in your equity side of your portfolios. And also remember, we've talked about this for the last few weeks, because we have that underlying inflationary tone, and we already saw the Bank of Canada hike their rates, that be cautious on your fixed income side as well. Don't make any long bets. Be very tactical in your bond positions and keep things shorter term for now. This is definitely kind of a general theme that you want to keep in there. U.S. Congress is nearing a Ukraine aid funding package. So they're looking at several $1 billion that they're looking to send to the Ukraine for aid, both on the war effort, but also on the humanitarian side of things. So they're looking at putting funding through to September 30th for those efforts from Congress. Wall Street regulators are also out there still working to propose climate risk rules as early as next week. This is kind of taking a back seat when it comes to news and what's going on. Of course, the Congress has still got a focus under the new administration, or I shouldn't say new, they've been in office now for a year. The Biden administration moving towards more and more green technologies. So that continues to be defined as to Wall Street and what those those rules are going to be to qualify for that, and what areas are going to be most impacted. U.S. shale producers Oasis, and Whiten are merging in a $6 billion deal. So we've been seeing a lot of mergers and acquisitions in the energy sector over the last couple of years as the price of oil has ramped up again. You're probably going to see a lot more through this surge in oil pricing, and also in a focus right now of bringing energy production back home, especially for the U.S. As I mentioned, the world has been reliant or has been buying a lot of oil and energy from Russia. All of a sudden, countries around the world are saying, hey, we need to not just do less of that as part of the sanctions against Russia, but also be less reliant on oil from unfriendly areas. And regardless of what happens in the Ukraine over the next weeks and months, obviously, global relationships with Russia are strained, and they're going to remain strained for quite some time. So it's going to be very important for countries to shift more production of oil and gas to home production or friendlier jurisdictions. Obviously, there's talks of the Keystone pipeline that was killed a year and a half ago, that would have been able to almost replace the amount of oil that the U.S. buys or was buying from Russia to get it from Canada, and now those discussions are reopened again. Obviously, that's a quicker way for the U.S. to get to long-term solutions to move away from Russian oil. Let's talk about what's coming up this week. Apple is going to host their product launch, so if you need to distract yourself from the news these days, Apple is going to do their spring launch of new product. The market is expecting a cheaper version of their iPhone with G5 technology, or 5G technology, sorry, and also a new iPad Air and a high-end Mac Mini. If you're into very expensive graphic design, the Mac Minis are usually not very cheap setups, but they're looking at rolling out new products. So that's coming up this week. Also, the U.S. Commerce Department is expected to show wholesale inventory numbers to rise again for January. International data for January is also scheduled to release. So we'll take a look at kind of where the wholesale inventory numbers have been moving for the last month. And also Bumble is expected to show a rise in their fourth quarter revenue. In case you're out there on the dating apps and you've been very active, maybe you've been helping Bumble out with the earnings in this last quarter. Other top news is Boeing is suspended buying titanium from Russia. This is following a lot of companies kind of pulling their support for the Russian economy. Boeing feels they can secure enough supply of titanium from other sources, so they're going to be pulling away from that. Uniqlo, however, is staying in Russia as Levi, American Express, and others are severing ties. The retailing company, or the retail stores in Russia of Uniqlo are staying open, along with a small group of international firms still operating there. Another one that's been under a lot of pressure is Coca-Cola. A lot of people asking them to pull their products from the shelves out of Russia as well. McDonald's was another one that people were pressuring, but I think I read this morning that they're now announcing a plan to shutter or temporary close anyway, their stores in Russia, or their restaurants in Russia. So we'll see more and more of that as more companies pull from those markets. We've already seen, we saw Amex, Visa, and MasterCard have also pulled their services from there, and we'll see more of that continue. Intel's Mobileye is confidently filing their IPO, the US IPO, and this is for their self-drive unit. So this is Mobileye putting out a new IPO in the United States, setting the stage for what is expected to be this year's biggest stock market float. Pretty much, I'd say we probably met the pretty biggest one in at least the last 6 to 8 months, as they're floating out their self-drive car unit. So we'll take a look at how that's going to perform into this volatility. Of course, we've seen a lot of pullback in the tech side as far as pricing goes and valuations go. But this is in that self-drive EV kind of car area, and also the chip manufacturers have done well through all this. As I've already discussed, the supply chain is still pretty tight to as far as product and pricing goes. Apple's expected to launch their low-cost 5G. Obviously, they want to get more products out on the shelf. This is usually their lighter launch. Their fall launch being bigger product launch as they gear up for the holiday season and back to school season sales. But they're looking at tapping into the lower price or the cheaper price model markets for the summertime. I will say though, Apple has shuttered or closed their stores in Russia for now, so we won't see any sales coming out of there as well. GameStop's top guy Cohen is taking a stake in Bed Bath & Beyond, and he's pushing for some change there. So the billionaire investor Ryan Cohen, who behind the GameStop name, if you remember, GameStop is the Reddit internet, the stock name that was famous last year as the online investors drove up those share prices. Well, he's taking a 10% stake in Bed Bath & Beyond, and he wants the retailer to look at strategic alternatives, including sale of the company. So looking at restructuring them and selling them off. So we'll see what happens with Bed Bath & Beyond from there. On the exchange side of things, when it comes to the currency, the Canadian dollar has actually been doing pretty strong. Not a surprise. Our dollar tends to perform quite well along in tandem with the price of oil. And of course, we've got oil prices doing amazing. We'll talk about in a second. So the Canadian dollar continuing to do strong. We saw that interest rate hike, which also gave it a little bit of strength. But nothing's going to be as strong as the US dollar when we have the US crisis. Global crisis. Whenever we have a global crisis, there's always a flight to safety in the market. That means global dollars rush to the US dollar, given more strength. We are seeing weakness in the the European currencies. Not a surprise given all this conflict being in Europe right now and more uncertainty over there than over here. That's going to continue. And as we mentioned already, the ruble has significantly dropped in valuation, and that will not likely change for quite some time as those sanctions stay in place. We did see the U.S. Treasury note rise a little bit to 1.84 from 1.774, basically. And that again, it's just strength on flight to safety strength into the U.S. market. On the commodity front, as we talked about, oil rearing straight through. Last high number I saw was around 135. I think it's coming off that high a little bit. And weeks ago it was barely 90. So we're seeing a ton of strength in the oil price. Not likely to see that drop anytime soon. Other commodities, as I mentioned, nickel, wheat, pretty much anything on the commodity front. Copper, we're seeing the numbers rise. Gold breaking through the 2,000 an ounce. In fact, I saw it through 230 this morning. I think it's leveled back down again in the high 220s, or sorry, 2,020 range. That's again flight to safety and inflationary protections. We've been talking about that gold play for a while. We've had it in the portfolios. We continue to like it. Would have liked to have more of it, but that would have been predicting a war. So we continue to hold those positions even after we've seen this run up. With that, pretty much all we have to cover this week. I know a lot of it's been around the Ukraine, but really that uncertainty is hanging over the markets. My real advice to everybody is, stay cautious. Don't flee from the market. The one thing to keep in mind is when everybody is selling, that's the time you need to look at buying. Don't jump in with both feet all in. You're never going to pick the bottom. You're never going to sell out at the top. Wade in slowly when you see value. When you see good positions, good companies that evaluations are down, take a look at the Canadian banks. They've seen a pullback through all this, mostly off that uncertainty trade, but really there's still a lot of value there. We're keeping a close eye on it. We have some great positions in the Canadian banking sector already. We're looking to maybe top those up a little bit, take advantage of those pullbacks, the strong dividend yields you see out of there. They're historically great payers over time. So take a look at those, but give us a call. Go to mikeonmoney.com. Happy to answer any of your questions. And with that, I'll let you get back to the rest of your day, and we'll get back to seeing what's going on and keeping you informed out there. Thanks, everyone. Take care and stay safe.